Ajay Bodke is with us of Prabhudas Lilladher to discuss how he sees the market panning out. Ajay, thanks very much. Broad pessimism all around, right, Ajay? What is the big factor, according to you, briefly, if you can begin there, which is sort of pushing prices lower the way we are seeing?
I think 3 or 4 issues. A lot of investors had pinned tremendous hopes on some sort of a fiscal boost from the budget. And unfortunately, with the exception of the affordable housing segment, where there have been some source, the attempt made, in my opinion, by the government for moral suasion, where they have asked the PSU banks to bail out the NBFCs, in my opinion, might be a non-starter. Because in India, typically, I think, moral suasion doesn't work. So I think a more radical program like a TARP, which was unveiled by the US government after Lehman crisis, to pick up, I think, the bad assets is something that the government should have thought about in conjunction with the RBI. So I think the negativity on the NBFC and HFC front, I think, continues. And I think far more radical measures is what the market is expecting. The other negative, of course, has been discussed ad nauseum on various channels, is the fact that the government has appeared to be slightly callous and insensitive to on the taxation front, insofar as FPIs are concerned, who are basically coming through the trust route. And some relief there would really have helped stem the panic that one is seeing from the FI end in the market. And lastly, I think on the IBC front, one must laud, I think, the alacrity with which the government has acted in terms of trying to reverse some of the very regressive, I think, verdicts that have come from the NCLT tribunal, where the secured and unsecured creditors have been put on par. So here you have a peculiar situation where the government is looking to borrow, sovereign borrowing they're expecting from most risk-averse pension funds who typically subscribe. But the vulture funds and the distressed asset buyers, who typically are itching to come and buy into the distressed assets in India, which run into $200 billion, unfortunately will have a trepidation, because they will be treated now on par with the unsecured creditors and suppliers. But it's a very good measure for the government that they have proposed these amendments. And lastly, I think 49% of manufacturing GDP is contributed by auto sector. The sector has tremendous backward and forward linkages. It is an employer of millions of people, including auto ancillaries, and a lot of contract labor, which is unskilled and semi-skilled. And lastly, the sector also has a lot of multiplier impact on other sectors of the economy. And what is the statement that has come from the chief advisor? I think he, let me complete this. He basically said that I think if the auto sector is not doing well, so what? Steel is doing well. I think this is the most callous statement that could have come from a senior policymaker. The government needs to come and unveil measures to help the auto sector.
All right, fair enough. That point is taken. Ajay, the concerns with regards to the auto sector are also valid. But we've seen 2 new SUVs come up, MG Hector as well as another one from the Kia stable, and they've seen a really good response. So where is the discrepancy coming?
Yeah, I think these 2 are products which have been launched, they've just been unveiled. And I think our analyst has sort of, given a very positive response to both these products. I think some 98,000 bookings have happened for the MG and 6,000 for one of the new launches for Hyundai. And I think the pricing there has attracted, in addition to some of the product features. But I think this is just a beginning. I think the kind of sharp drop for the last 8 months, month on month, that the sector has seen, due to confluence of various reasons, I think it does call for tremendous help from the policymakers.
Okay. The other stock which I wanted your thoughts on is actually Talwakers. I don't know if you look at it. The company clarified they do have a high pledge of over 70% in both their listed arms, but separately they clarified that there's no invocation of the pledge shares which has taken place. They are comfortable in terms of servicing debt at this point in time. Do you think that this stock is now the next on the radar to see the kind of punishment a lot of other mid-caps have seen because of, say, concerns on pledge?
Yeah, I think, this is, if you look at the pattern, this is all a part of the heightened risk aversion that one is seeing for the last now, since January 18 towards small and mid-cap stocks. I think the CNX small cap index I think was at 9,600 levels in January 18, and the last I saw a couple of days back, it is still languishing at 6,000. So at the index level, the CNX small cap index has seen a 3,500 point erosion on a base of 9,600. So that essentially speaks volumes about the kind of massive erosion in wealth that investors have seen in the small and mid cap space. And there are various reasons, we can go into it. It might take a few, half an hour or so. But I think the bottom line basically is that, again, I think we need to look at the internals of the market and not get carried away by the fact that index is down 5% from its peak. That's only the narrow index. The broader index has been ailing. The broader index has been suffering for a very long time. And I think that's basically symptomatic of the pain that has that's there in the broader economy. With all the engines of growth, consumption slowing down, domestic investments not picking up, exports being anemic, the only engine of growth that's working is the government expenditure in roads, railways and power transmission.
Okay, Ajay, it's a pleasure. Thank you very much. Forceful comments coming in from Ajay Bodke at Prabhudas, Lilladher. And I mean, lots of worries being highlighted.